everyone, welcome to the Ichimoku Charts.com daily analysis for the Aussie dollar US dollar FX for Tuesday, August 27th, 2013. Now the candle we're analysing is the second last candle on this chart. That final candle is still currently developing and has quite some time to continue trading. It is very significant, and I will mention it in a minute, but we'll concentrate on the second last candle first, and that's the candle that has just finished trading. And we have a change of trend. Technically, we have a candle with a lower high and a lower low. For the previous day's trading, we saw the candle make a higher high and a higher low, and therefore change this previous downtrend to the upside. That occurred on a spinning top type candle, and really did raise some doubt about the potential for this market to continue trending up. The market interacted with the area around the Kijun-sen and Tenkan-sen as when it was rejected from there with this indecisive spinning top type candle, and today we had confirmation of that change of trend with this candle making a lower high and a lower low, and a fairly large black body candle in terms of referencing the previous 3 or 4 trading days, suggesting that the sellers have once again have found some decent downside momentum in net terms and have actually closed the market down below the 90-cent level. The problem here is that we had some decent rejection here where the sellers lost commitment down around the 89.30 level, and we saw buying coming in, and that's exactly what we're seeing in this current candle as it's developing again. So that may be an important level for us to watch in the very short time frame around that 89.30 level. The market has failed to the sellers have failed to close with control in this market, where they had fairly strong control as they were testing down to these lower levels, but the buyers came back in. So a good battle between the buyers and sellers in terms of control, where neither side has managed to close with control, but really the sellers seem to be the stronger party here for the trading day, with this being a black-bodied candle, although the sellers certainly aren't as strong as we'd like to see, and there is some doubt about follow-through. But looking at this current candle, how it's developed, we do have a candle that's made a lower high and a lower low, and therefore confirming a change of trend at the moment, although that may not finish like that. But certainly it does look as though we will have a trend to the downside. The problem here for the buyers is that 90 cents may now hold as resistance where it was once support. There is a good possibility of it holding as resistance, so it becomes a very, very important area if there is going to be a change of trend back to the upside. Now, in terms of the Fibonacci extension, we're examining the relationship of the current first time frame downtrend to the previous time the market is trending down, and here with this current candle that has been finalized, we have traded through the 38.2%, the 50%, and down close to the 61.8% and being rejected from there, with the buyers losing commitment. And that does suggest that there is potential for a change of trend, but at the moment we're not seeing that. On this current candle that's developing, we are once again seeing rejection from the below the 50% level and below the 61.8% level, suggesting that these aren't strong levels down here for the sellers, and the buyers are liking this market down around here and are coming in and buying, but not too strongly where they're actually taking control of the market, as we have seen in this candle that has finished developing. In terms of the Fibonacci retracement, today we saw the market test through the 50% and the 61.8% and close just at the 78.6% level. So that's suggesting that there is some decent bearishness in this market, but we've seen rejection from below the 100% level, suggesting that all is not well with the sellers. They did lose commitment down that area, and hinting at a possibility of a change of trend. At the moment, this current candle, as it's developing, has traded through the 100% level. The market has now, it is closing down below there, but the close will be some time off, so we can't really read too much into that at the moment. The next level to be wary of is the 161.8% level at 88.96. That may come into play if the market becomes bearish once again in the faster time frame, so let's look to that for a potential area of support, but at the moment we can't rely on this candle that's the last one on the chart because it hasn't finished trading. Now, in terms of Ichimoku, obviously a bearish market in all three time frames. The market's trading below the cloud, so bearish in the long-term time frame, bearish in the medium-term time frame by trading below the Kijun-sen, the pink line, and in the fast-term time frame by trading below the Tenkan-sen, the green line. The Chikou span is below the corresponding price action, so it's confirming negativity, and it is suggesting this market is destined for lower levels. So there is a possibility of the market trading off, and the next area of minor support is down around the 88.46 level if we trade through these areas, these Fibonacci areas, and then down to the 88 cent level, so some solid support down below where the market's trading. To the upside, 90 cents may offer itself as resistance to this market, but we should also see very strong resistance around the Kijun-sen and the Tenkan-sen around the 90.70 level to the 90.85 level. So overall a bearish market, but a day where the sellers lost commitment. The buyers haven't taken control, neither have the sellers, so a little bit of indecision, but the sellers have made some net downside momentum, so quite a few mixed signals in this market. And if we see the market reject from the 90 cent level and then continued bearishness to the downside, we could see the market testing down to the 88.40 level or some of the Fibonacci ratios that have been mentioned.